Hello and welcome to Gold and Silver Assets. It's Sunday the 10th of January 2021. A wealth of interesting things were said in the comments section last week, and thanks to all of you for your contributions. They were really useful. One thing that did come up that caught my eye was the concern that mining stocks could be swiped off of you. Are your stocks vulnerable to bail-in? For those of you who haven't seen my video on retirement funds, you can check that out for more details about bail-in. But just to summarise, bail-out is when the taxpayer, via the government, injects funds to prop up the banks when they run into trouble. Bail-in is where the bank's creditors inject funds to prop up the bank when it runs into trouble. Bank creditors include the bank's shareholders, bondholders and depositors. The G20 met in Brisbane in 2014 and rubber-stamped bail-ins and has since been written into law in many countries. The majority of the population have no clue that this even exists, and they don't really understand what the implications of that are. The exact details of bail-in laws do differ between countries, and so you will need to look at the specific situation in your particular country. The trigger for bail-ins can be rather vague and variable. There is variation in terms of what exactly can be bailed in, and deposit insurance may or may not be available in your country. It's worth checking out not only the value that's covered, but also what the conditions are for that. Can stocks be bailed in? Well, if you're talking about the stocks of the bank that's running into trouble, then yes, absolutely. In fact, bank stocks are probably going to be one of the first things to be swiped. But what about other stocks? Well, here on this channel, most of us are going to be interested in what could happen to our mining stock portfolio. Could they be bailed in? Now, this isn't an easy topic to grasp, as there are some murky areas, and the answer will vary depending on where you live. I've put together this answer, which is specific to New Zealand and Australia, because I have some understanding of the system here. Now, although this answer won't necessarily be the case for those living in, say, the USA or the UK, it's still going to be useful to you because it will give you pointers as to what questions you need to ask and how to research this for yourself. The first question I'd want answered is, for the stocks you have bought, do you have full control of them, and does anyone else control them? In Australasia, we have something called CHESS, which stands for Clearinghouse Sub-Register System. This is the computer system used by the ASX to manage the settlement of share transactions and to record shareholdings. You're also assigned a holder ID number. If you buy your stocks through a broker that is CHESS ASX sponsored, then basically it means that you own the stocks directly. There's no intermediary. Now, not all brokers offer CHESS, and instead they hold the stocks on your behalf. Personally, I avoid such brokers regardless of how cheap they may be. I prefer to have direct ownership of my stocks. What about if someone who lives in Australia or New Zealand wants to own foreign stocks, i.e. stocks that are not listed on the ASX or NZX? Well, the CHESS system doesn't apply there. A local broker will purchase the stocks through an overseas broker, and those stocks will be held by a sub-custodian. In many cases, the stocks are held in a pooled account where all international holdings are combined and held together in one place rather than in individual accounts. The upshot of that for Australasians is that ASX stocks can be held directly, but foreign stocks are held by an intermediary. The next question is, does that really matter? To answer that, first we need to understand custodians. A custodian is a financial institution and it's usually a large one. And examples can include JP Morgan, Barclays Bank. And they can hold custody of trillions of dollars worth of assets. They hold the customer's securities for safekeeping to prevent them from being lost or stolen. All custodians are brokers, but not all brokers are custodians. In most countries, institutional funds, such as mutual funds and retirement funds, are required by law to have a custodian for their assets. Bespoke agreements are drawn up between the custodian and the customer. Now, I'm pretty sure that most of the agreements include limited liability for force majeure events. But of course, how do you define a force majeure event? Anyway, such custodial agreements are actually available on the internet, and at this point I tried looking through some of them. And this is where things got a little bit murky for me, since I'm not a lawyer and I haven't worked directly in the financial industry. From my research, my understanding is that the assets of each custody account is kept separate from the assets of the custodian and maintained under joint control. That would mean that unlike cash, the assets would be held separately from the bank. Now, this sounds promising, but there are some questions that I still have here. There seems to be variation in terms of whether the assets are segregated or pooled, and can the assets be easily identified? There were some clauses that I read that made me think that it was possible for the custodian to take possession of the assets, but I'm not sure about that. I don't really understand lawyer language. From there, I went down the rabbit hole of sub-custodians, and apparently this is quite common. Why do these custody chains actually exist? I'm not really sure. Why would a custodian have 3 or 4 sub-custodians, which can happen? If anyone knows, then let us know in the comments. But it's possible for a custodian to have a sub-custodian, which in turn has its own sub-custodian, and that chain can come in a variety of lengths. The contract that the customer has with the custodian can be different from the contract between the custodian and the sub-custodians. Now, what's the implications of that? Well, say a sub-custodian goes bankrupt. My understanding is that the customer doesn't have a contract with that sub-custodian, and so wouldn't be able to make a claim for the assets. The customer only has a contract with the custodian. And another question is, can the sub-custodian bankruptcy be considered a force majeure event, in which case the custodian will have no liability? Here's an example of a clause I came across, and this was just copied and pasted word for word from the internet here. So what it says is, for greater certainty, the custodian shall not be responsible for any loss or diminution in respect of any or all property resulting from the bankruptcy or insolvency of any such agent of the custodian, except to the extent that the custodian fails to meet its standard of care set out in section 4.1 with respect to the section and monitoring of such agent. My interpretation of this is that if the sub-custodian goes belly up, it's not the custodian's problem and the customer has to suck up the loss. Have I got that right? Anyway, let's move on. Now you might say, well, surely there's a government protection for broker insolvency. In the USA there is. It's called Securities Investor Protection Cover, or SPIC. And that covers brokerage accounts up to $500,000 in securities, of which $250,000 can be cash. Again, that all sounds very hopeful, But it's not like all of that is going to happen overnight. Asset retrieval from bankruptcy can be difficult and time consuming. And during that time, you would really want to be able to trade your stock, but you won't be able to. I read somewhere that SPIC only protects the number of shares rather than the value. For example, if you held 200 shares of Apple and the custodian subsequently failed, then SPIC will work to replace and restore the same number of shares, but if the Apple stock has plummeted in the time it takes to sort through the administration, then they're not going to reimburse you for the currency you lost through not being able to trade it. That's as far as I got with this subject, and I did find it very complex and murky. You really need to have a lawyer who's got knowledge of financial contract law to really kind of give us a definitive answer. But the lessons I've learned from this is that it's very important to understand exactly how your stocks are held and what the custodial structure is. My understanding for the Australasians in the audience is that for stocks held individually, my preference is to make sure that they are purchased through the CHESS system so that you hold them directly. For foreign stocks, I don't think there is a choice but to use a custodian, but correct me if I'm wrong on that. And for stocks held in any kind of fund, it will have to be through a custodian by law. Therefore, if you want to minimise the risk of your stocks being swiped, then buying on the ASX or NZX through a CHESS-sponsored broker is probably the best option. This doesn't mean you necessarily have to go out and sell all your stocks. No, this is just simply a discussion of the risks and talking about the worst case scenarios. You always have to consider what could go wrong. And that's a really important consideration when considering how you apportion your investments. Putting everything that you own into a basket of paper assets has its risks, as we've seen here. Yes, you could do very well on paper, but what's the worst case scenario? It could all disappear overnight. I therefore consider owning physical assets, which I have full control over as a proportion of a portfolio, is an important form of diversification. If you hold physical gold, you can actually hold it in your hand and there's no contract involved. You don't need to decipher through complex lawyer language to work anything out. Of course, there are other assets beside gold that can be considered for this purpose. Now, in answer to the question that we posed at the beginning, will your stocks be bailed in? Well, I think that's actually a low probability event, but the probability is not zero. If it were to happen on a large scale, I think it would be chaos, and I think your stock portfolio will be very low on your list of priorities at that stage. Now, having said all that, other than bankruptcy or bail-in, does anyone know of any other reasons why your stocks might be taken away from you without your consent? Next up, the market update. Let's start with gold priced in US dollars on the daily scale. And what a week. Some of you will remember from last week, I was talking about how this week might be a bit quiet. And it will be next week that would be the more eventful one, let's say. But actually, this one turned out to be quite eventful. So, looking back, I think when we last spoke, we were around here and we were talking about this triangle formation here. And of course, we didn't know the direction it would break out. But of course, it just blasted up through there with an upwards breakout. With these things, you do have to wait for a breakout to occur. And also, particularly with precious metals, you do get little fake wicks to mess people around, basically. Anyway, so price seemed to be going up quite nicely, and we had this trend line that went up along here, and that's price just then broke down. Now, why did it break down at this point here? Well, if we look back, that's 1960. Now, of course, a similar thing happened back here. And of course, over here, it seems to be a bit of a resistance over here as well. So that's an important level to watch there. Anyway, price started to break down, and if you looked on the lower time scales, there was a little triangle that was forming here, and that broke that lower trend line there. And of course, on Friday, we had a massive dump over here like this. Price seems to have been supported around that 1850 level that we talked about last time. So where do we go from here? Now, this will probably freak quite a lot of people out, a move like this. Something similar happened here. Does this mean that we're going to turn bearish on gold? Well, for me, I still haven't got enough evidence to be bearish at the moment. I'm still bullish. Of course, I'm perfectly willing to change my view on that. And when would I consider that I was wrong? When would I flip my view to bearish? Well, for me, I still think that this zone is very strong support here, because it just dates back to the last peak there, and there's just so much price action there. So I'm still holding that view. Of course, these things can break. So, you know, if it does break, then we'll just have to have a rethink about all of this. But in the meantime, I'm still bullish. And where do I think things are going from here? Where are the next support levels? My view is that this here was this kind of short-term bottom, and if we make a new low below that, then I'd start to get concerned, and I'd be very concerned if we go below this channel level here. So we're talking 1720. But I don't know. I think it's a low chance that we're going to go below that. A further drop in the next couple of weeks is possible. If we do go further below here, so when this price dropped, it did bounce back up from this level here. And I think if we do go down, this 1810 level will be the next support level. And that possibly could be the next bounce point. That's what I'm looking for. It could dip into here as a little wick, but yeah, I'd start to get concerned if we get big solid candles coming through this zone over here. Let's see what happens. Moving on to silver priced in US dollars on the daily scale. Again, something similar here. So we had this uptrend, and this was going on very nicely. And last time we talked about this support line over here, but I also mentioned that this price action here was going to present a problem and would be a resistance point, and that's what happened really. We didn't even get to this 28.26 level here this time. But the other thing that I did mention before was that on the larger scale we do have this triangular structure, and we had a breakout from that, and it's quite common to retest that top of this triangle. And so we've got a couple of support levels to think about if we are thinking price is going to go lower. One was this area over here at around 25, and actually price bounced off of that and came back up again, which is promising. But remember, this is more of a kind of support band here, and so it is possible for this to actually go down to around 23.5 at the very lowest, I would say, before it bounced back up again. And I think that would freak quite a few people out. But that's what this market does. It shakes people out. And so you've got to stand back and think about what your view is and what your time scale is with what you're working with. I'm still thinking that this is all looking very bullish to me, and so this is just a minor little shakeout before we proceed upwards again. And I think it's going to have another attempt at this area here within this zone here. But look, it's not going to be straightforward. It's not going to just shoot through there straight away. So we've got quite a large zone to work through here. But yeah, I'm thinking another short-term smaller dip, and then I think we'll be on the rise again. When would I change my mind? We would have to drop below 22. I'd start getting worried if we go below this upper trend line. But yeah, if we drop below 22, then I would flip my bullishness to bearishness. But yeah, it just seems a bit unlikely. I mean, we've had these wicks bouncing off of that kind of level before, which suggests it doesn't really want to go much lower at this point. Let's move on to the miners. So this is the GDX on the daily scale. And with the GDX, so first of all, we had this downsloping channel and price poked just below it, but then recovered actually quite nicely. And now we've got this smaller upsloping channel. And again here, it poked just above it and now it's on its way down again. It hasn't quite hit the bottom of the channel, so it did bounce off of it, and we could just get another hit of there before moving up. If we do get a break of that again, we've got quite a bit of support in this area here. This is long-term support at 32. I would start getting particularly worried if we drop below that, because I think we've got much lower targets to go. It could go into the kind of 25, 24 area if we do get a close below 32, I'd say. But we just have to wait and see what the market wants to do. The market is going to tell us. I don't actually know what the future is. Nobody does. And so we just have to let the market give us what the signals are. At the moment, I'm still remaining bullish though. But as I said, another shorter term dip is possible before we start moving up. And finally, we've got the SILJ. And I thought that this was looking like a curve. And I had mentioned that I'd expect one more retest of that curve. For a while, price actually just wasn't going down there, and it actually peaked up here above that 17 resistance level here, and actually went higher than this previous high there. But it just couldn't sustain it. It was looking a little bit weak with this price action. And then price dropped down quite dramatically. I know that some of the junior miners have been hit quite hard with this. And I don't know that the pain is quite over yet for those junior miners. Again, if we're working on the idea that we're going to get a retest of this before moving up, then we're looking at a drop to around 15. And as I said previously, it's quite hard to accurately and objectively draw these curves. It looks quite easy, but when you try and do it yourself and get someone else to do it, you'll get slightly different results. So this is just a rough guide here. When would I change my mind about the silver miners? Well, if we got a break, again, a decisive break below this curvature here. So now the other reason that I think that price might bounce off of that 15 level, as it would probably act as support, is because that was resistance over here. So I think that's a possibility there. So we're thinking price goes here and then makes its move up. So overall, I'm just not feeling bearish still. I just can't help it. I don't know if I'm right or wrong. At the end of the day, I don't really care. It's all a profit really that I care about. And so for me, until I see otherwise, I consider these dips as a buying opportunity. But bear in mind, you know, I will change my mind if we get a drop below the levels that I've mentioned. Why am I not too concerned as well? Well, I mean, bullion sales in terms of physical sales are doing amazingly well. They've done amazingly well this year. Even, I mean, you might say, oh, but price was going up when those sales were high. But even in November, when we were in the correction phase and gold had corrected pretty significantly at that stage, bullion sales at mints around the world were up at least 50% compared to previous years. The other thing, again, this is anecdotal. I don't know if any of you have heard any similar anecdotes, but I'm hearing that people aren't actually selling their physical bullion to brokers. So the brokers aren't getting those buybacks. So again, I mean, I know that the physical market is different from the spot market, but that's actually an important consideration as well. Anyway, those are just my thoughts on this. So me personally, I'm not getting frightened by this. But, well, let's see how things play out. It'll be very, very interesting in coming weeks. That's it from me for this week. Hope you've all had a fantastic week. All the best and see you next week. Bye.